Hello and welcome to Follow the Money. I'm Robert Tan. Join us as we explore the tools and insights you need to jumpstart your financial journey. On today's Follow the Money, fresh data from the Bangko Sentral ng Pilipinas forecasting inflation for May 2025 to be as low as 0.9% to 1.7%. What lies ahead for prices, interest rates, and economic growth? And how does the Philippines fit into the broader global trends? And joining us today is ASEAN economist at HSBC, Mr. Aris Dacanay. Welcome to Follow the Money, Aris. Thank you for joining us.
Thank you, Sir Robert, for having us.
Okay, to start us off, Aris, now let's begin our discussion on inflation, which will be released on Thursday. Now, what is your inflation outlook for the month of May and for the rest of the year?
So we do think inflation in May will come in at around 1.2% year on year, so still below the 2 to 4% target range of the BSP. But overall, by year end, we do think that inflation will go up because mainly the base effects from the price reductions from last year will have to take into effect. And on average, inflation will likely hold at around 2.3% year on year for the full year 2025. So at the lower end range of the BSP's target range.
Now, the head of research at First Metro Investment Corporation forecasted in an interview with Bilyonaryo News Channel's Business 360 that inflation may accelerate to 1.5% due to food inflation, particularly the increase in rice. Now, do you agree with her assessment?
Well, there are upside risks to inflation. And true enough, if you look at the data, beef prices have gone up, pork prices have gone up, and most of the vegetable items have gone up, particularly palaya, eggplants, cabbages. But if you look at the data, particularly on NCR supermarkets, rice prices have gone down from around 42.5 pesos a kilo to around 41.4 for the last time we checked. And with rice, a heavy staple in the consumer basket, we do think that the downside risks outweigh the upside risks in food inflation. So that's why we came up with 1.2%. But apart from food prices, we also need to consider the fact that energy prices have gone down. Meralco has recently cut its electricity rates by, I think, around 5%, if I'm not mistaken. And at the same time, fuel prices have gone down because of the strong peso and because of soft global oil prices.
Now, do you think this is sustainable?
We do think that it is sustainable because if you look at all the other inflationary trends, everyone in ASEAN's inflation rate is on its way down because there are three factors bringing inflation down throughout the whole region. One, as we already mentioned, global rice prices is on its way down. Global production of rice was better than expected and supply has been a lot. We have yet to see the floor of how much rice prices would go down. To be exact, rice prices globally have gone down by 30%, but retail prices locally have only gone down by 11%. So there's still more room for retail prices to go down, or food in general, to ease. Second, you have easing oil prices. As we do know, there are trade risks throughout the global economy. And with trade risks, global growth may slow down compared to before. And that too will decrease demand for oil prices to the benefit of us, the consumers of oil, where, as you can see, there has already been rollbacks in RON 91, RON 95, and the diesel prices. And last but not least, there is what you call a redirection of exports. China, as we know, will face higher tariffs, likely higher tariffs this year compared to last. So instead of selling to the US, it might redirect its exports to the second fastest growing region in the world, and that is ASEAN.
Now,
and if
okay.
Yes.
Go ahead. You can finish.
So with more exports to the ASEAN region, there's more supply, and that too will increase competition and will bring down prices in the Philippines.
Now, looking at all that, how do you think this can affect the equity markets? Do you think we will see a rally in the PSEI if inflation decelerates in May? And looking at it also on the other spectrum, if it accelerates, how do you think it will affect?
Well, the rally will be limited, or at least we will need to monitor the performance of the real estate sector. As we all know, when the POGOs left the Philippines, there was a lot of office, what do you call that, office room or residential supply went up. But if you look at no the drivers of the economy, policy rates,
Yeah.
interest rates are on its way down. Inflation is on its way down. Growth will likely go up, mainly because you have people were able to finally build their savings back up from last year. So all these are actually good for the consumer sector, for the retail sector, etc., etc.
Do you think all this good news is also in part of a lot of the spending during the elections?
Yes, as we know, over the past six elections, the election quarter, particularly the May month of the year, of every election year, has been a very good way, a very good opportunity to support growth. So we do think that growth will hold up in the second quarter of this year.
Which is why actually I was asking a while ago if it's sustainable, if since we just came from great spending from election and now we're seeing what we are seeing in the next quarters with regards to inflation, and you say it can be sustained in the next quarter, or we see it rising again?
So the rising will be more of the base effects, but we do expect overall, not just in the Philippines, but everywhere else in ASEAN, to have inflation really low. Because as mentioned, there are three global factors that are bringing overall prices down. So yes,
No.
it's not on the demand side issue. That's why it's sustainable. It's more on the supply side. And it's favorable for the Philippines, most especially for your every Filipino household.
Now, as we know, bond markets now tend to react positively during times of uncertainty. Now, how do you think the bond market will react if inflation accelerates?
If inflation accelerates, or at least accelerates more than it should be, let's just say if it breaches the BSP target of 4%, of course you would expect the central bank to keep its policy rate steady, and therefore, with interest rates not going down, the bonds will not rally whatsoever. But if you look at where inflation is right now, at 1.4%, where it currently is, there's a lot of room for inflation to reaccelerate before we actually stoke any concerns of any rate hikes or any rate pauses. There's just really so much room for the BSP to cut interest rates, and with that, of course, the bond market will rally. I think the 10-year right now is floating at around 6.14%. The BSP has 50 basis points worth of rate, or at least has signaled a total of 50 basis points worth of rate cuts. We are also in a gradual fiscal consolidation path. So I think the upside risks, or sorry, the downside risks to bonds are very limited. And I do think the bond market is an exciting thing to monitor, particularly for the Philippines.
Now, with that positive outlook, which stocks do you think you could recommend to investors looking to increase their equity?
So we do think the consumer market will likely recover, given because household budget is finally intact with interest rates going down, the cost of debt going down, and of course inflation going down. So I do think the retail sector, at least anything that's related to consumer, is something that we can monitor.
Now, if inflation does rise in May, do you think the Bangko Sentral ng Pilipinas will still cut interest rates on June 19?
Well, it depends on how much inflation will go up. So the range of the BSP is from 0.9 to 1.7%. Even the highest is below the BSP target band of 2 to 4%. So if it stays within the current BSP forecast, I do think there is still room for rate cuts in throughout the second half of the year. But of course, if it goes back, if it really surprises to the upside, let's say above 2%, that may be a signal for the BSP to keep rates steady. But whether that risk is high, I don't think so.
If it remains within the threshold of the inflation rate below 2%, how many rate cuts do you think can you foresee for the rest of the year?
I do think there's 50 basis points total in the pipeline. Mr. Governor Remolona also mentioned it. other monetary board members have also signaled the possibility of, again, 50 basis points worth of rate cuts. If growth goes down even further, let's say trade policy throughout the globe is worse than we initially expected, I do think there's room for the BSP to go at 4.75%. But with how the Philippine economy is expected to be resilient, we do think 5% is the sweet spot.
Okay, Aris, just hold that thought. You know, we are seeing inflation drop to levels not seen in over 2 years. We'll next ask Mr. Dacanay what this means for the broader economy. Follow the Money returns after a short break. Welcome back to Follow the Money. From the key forces behind easing inflation forecast for May, we now turn to its implications. We're still with ASEAN economist of HSBC, Aris Dacanay. Now, Aris, with all these positive outlooks, the easing of the inflation, how does it look now on the local scene in terms of the local economy? How does this translate to helping even the smaller businesses here in the Philippines?
Of course, when inflation is lower, household budgets are more intact, or the purchasing power of these households are more intact. And that, of course, is a big boost for MSMEs, for your sari-sari stores, for your retail stores, and even your digital marketers or digital resellers. So it's an opportunity for them. They have to grab this opportunity. And I do think, if you look at the GDP data, household consumption is finally up, better than the past 4 quarters. So we hope to see this trajectory to increase even further, and of course to the benefit of the MSMEs.
So do you see this greater spending by households going through to the next quarters as the inflation eases, and as you mentioned, stronger purchasing power by households?
Yes, I do think so. Because if wages continue to go up, and the data shows that it is, and inflation is going down, purchasing power is finally improving. And not to mention the fact that if you currently have a loan, your debt servicing will actually decrease because of the fact that interest rates are going down. If you could see bank lending, I think mortgages were as high as 10% at the peak of the policy rate hikes. But now we are on the trajectory of maybe at around 7 to 8%. That big 33 percentage point jump will be a benefit to households.
Now, if this continues, you see this continuing till the end of the year, and the inflation rate not actually going up to the threshold of the 2 to 4%. Do you see that happening?
Yes, I think the risk of it breaching 4% is near zero.
Now, on another note, the unemployment data will be released on Friday. Now, what is your projected unemployment rate for April and for the rest of the year? You can include underemployment if you can.
We don't have a forecast, but the March figure was at 3.9%. And I do think it will retain at 3.9% because we mentioned a while ago, the election season in the Philippines is always a big boost to the economy on both consumer, government spending, etc., etc. So with election spending up, there is a large demand for basically your short-term jobs. Your gig economy will likely increase. So we do think that low unemployment figure of 3.9% will likely to be sustained. But moving forward, I do think unemployment will remain relatively low compared to pre-pandemic levels. And that's one thing that I think is good to highlight. Before the pandemic, unemployment rate was as high as around 4.7%. It sometimes goes to 5% even. But after the pandemic, notice that our unemployment rate now ranges between 3.2 to 4.5%. That structural improvement can be, we can thank digitalization for that structural improvement. You have a lot of these gig economy, or at least a lot of these Filipinos being resilient, knowing how to hustle, finding ways to earn income through the digital space. And you could have seen through the data that there has been millions of jobs created since the pandemic thanks to the digital sector.
So do you think there's going to be a snowball effect as the inflation decreases, more spending power, people are spending more, so the smaller businesses will get more income, they'll grow, they'll hire more people. So do you think this snowball effect will happen and become sustainable until the end of the
Yes,
year?
I do think we are very bullish on the Philippine aspects. As the global economy slows down, a lot of foreign investors are looking at the Philippines to see as a safe haven because amongst everyone else in ASEAN, we do expect that in 2025, the Philippines will be the fastest growing economy in the region at 5.6%.
Now, do you see a lot of foreign investors coming in? Because at the start of the year, they were a bit cautious, especially with the U.S. tariffs still looming. Right now, with this, do you see that the foreign investors are looking at the Philippines now at a better outlook to invest in?
There is a wait and see approach, of course, indeed. But if you read between the lines, or at least the interest in the Philippine economy, it has really grown, particularly as a way, at least as the top theme when it comes to the China +1+1 strategy. Now, what is the China +1+1? The first +1 is to relocate away from China, and the second +1 is to relocate at a place that could sell to the US. And the top of that list is the Philippines because amongst developing Asia, we have the lowest reciprocal tariff announced. So if you want to still continue selling to the US, selling from the Philippines has an advantage. And you look at Korea. Korea is a very good example because in December of 2024, right after Mr. Trump won the election, Korea promised $1.7 billion of investments in the Philippines that would hopefully materialize in the second half of 2025, 1 billion of which is from Samsung. Now, so if you look at the China +1+1, the Philippines is a good place to start.
Now, Aris, before I let you go, with all these positive outlooks happening in our economy, what else do you think that the government can do to help sustain this on a long-term basis towards the end of the year, even towards next year? What else do you think that the government can do?
That's the name of the game, being able to attract as much investments as possible, particularly brick and mortar investments. There are two fundamental aspects in the Philippines that needs improvement relative to everyone in ASEAN. One, we are ranked the lowest in terms of ease of doing business. There is a lot of red tape in the Philippines that need to be considered, that need to be revised or at least reconsidered. And second is high electricity rates. As we all know, the government is currently on top of both these issues. We've already set up the green lane when it comes to renewable energy. And because of that, you could see that a lot of FDI approvals are in the renewable energy space. So you could see the benefits of reducing red tape through the renewable energy sector. And at the same time, the government is reviewing as well the EPIRA law. Hopefully there are fruits to this discussion and that we get to see electricity rates go down in the near future.
Okay, on that note, thank you for your insights, Aris, on our economy.
Thank you very much, Sir Robert.
Okay, that was Aris Dacanay, the ASEAN economist of HSBC. And before we go, a word to the wise from former Federal Reserve Chairman Ben Bernanke. Although low inflation is generally good, inflation that is too low can pose risks to the economy, especially when the economy is struggling. In the most extreme case, very low inflation can morph into deflation, which can contribute to long periods of economic stagnation. And that's it for today's edition of Follow the Money. I'm Robert Tan. Thanks for watching. Keep it here on BNC, the Bilyonaryo News Channel. Always on top.